Let's move on. We've got another management waiting to chat with us. Kabel reported a strong set of Q2 numbers. The EBITDA margins expanded by 280 basis points. The revenues went up by 18% on a year-on-year basis. But losses continue in the fast-moving electrical goods FMEG segment. To discuss this and more, we're joined by Rajesh, Jain, the CFO of the company now. Rajesh, morning, and thank you very much for joining in. First, if you could give us the volume growth number for Q2 and break it up. What was for wires, what was for cables, and what can you end the year with in terms of a volume growth? How does the second half of the year look?
Yeah, so thanks so for giving us time on your channel, and we are very happy to be with you. And so we have seen very good growth in terms of volume as well as in value also. And in wire and cable, in the first half of this year, we grew by almost 24%. In this, majority of the growth came from cable, where we grew by almost 30%, and almost 22% in wire segment. And this is in line or in better with the overall industry growth. So these are good volume growth in this quarter as well as in first half of this year.
And can you maintain a volume growth of 25-30% for the full year?
So historically, we have grown more than industry average, and it was about 20%. So we are expecting the same growth even for the second half of this year also.
So, hi, good morning, Mr. Jain. So, what do you end this year with in terms of a revenue number? If you go by the current run rate, I think you'll end the year closer to around 6,500 crores. So, could you give us a broad band out there? So, you think 6,500 crores for the year?
So see, revenue depends on the copper and aluminum prices also. But if we see as a stable, because we have seen good stable prices in Q1, Q2, and H1 also. So with this run rate, we can achieve the total overall turnover of more than 6,500 crores.
Okay, more than 6,500 crores. Got that. Mr. Jain, what about the EBITDA performance? Your gross margins have been close to around 20%, and your EBITDA margins are around 7.5%. You want to maintain these levels as well for the remainder of this year, or can it be better?
Yeah, we are working on improving the same. And as you have seen that we have done very good in H1 of this year in terms of improvement in our EBITDA margins, gross margins, and we'll keep improving in this. And and even in this also, in wire and cable, we have done much better. Like we were able to achieve the EBITDA rates of 9%, and we are working to improve in that segment as well.
Okay. Mr. Jain, good morning and thanks for joining in. The volume growth of 20% that you spoke about for the full year, can you break that up for us in terms of what the export contribution would look like? How are the export markets currently? I understand that now almost 30% of your business comes from exports. How much do you plan to grow it to over the next couple of years?
So if you see, we have grown in export is very big segment for us, and we have seen the almost similar growth in domestic as well in export market. And right now, we hope we will keep maintain this ratio of 29% or maybe 1 or 2% plus or minus. But we have equal focus on export as well as our domestic market, because at both places we have very good demand. We have seen this demand is based on real estate sector, demand from real estate sector, infrastructure development. Globally also, we have seen very good demand in green energy or electrical vehicle. So it seems we will maintain this growth in both the markets. We have equal focus on this.
No, the reason I'm asking is because last time when we spoke with you, you had said that, the cable export business generally is more margin accretive. So I guess you have a better operational performance in the export business in the cable market. So tell me, if you are seeing the contribution, you're saying the overall contribution will be steady, but there is growth over there. Can you get to even, double-digit margins in this wires and cable business because of what's happening with exports?
Not only from export, but domestic also. So we have, as I told, we have equal focus in domestic and export, and we are working to improve our margins. And this will come from both the markets, from domestic as well as export. And as we are adding few more value-added product in our export market, and at the same time, we are also focusing on increasing our distribution in India market. So we are expecting this double-digit numbers also in maybe by FY25 or 26.
So the FMEG business, the electrical goods business, It's seen just a 7%, a single-digit year-on-year revenue growth. Quarter-on-quarter revenues have actually fallen. Sequentially, even the EBIT loss has expanded. Can you explain what happened in the current quarter? Why was it muted?
So see, this FMEG sector, first we are very new because we started this
Yes.
FMEG in FY 2019 only. So, and it takes time to establish any market in FMEG because this is the product and nature of market. It takes some time. But still, if you see for this industry, this half year was very muted and almost all industry at flat or flat to negative growth. In this year, we have grown, if I consider H1 versus H1 of last year, we have grown by 20%, which is one of the best growth in this industry. And at the same time, margins also in EBIT margins, we have, though losses are there, but we have improved and we have reduced the rate of losses what we have done. And the way we are focusing on new products and new markets or strong our distribution network. So we are expecting like we will improve our performance in terms of revenue growth as well as uh, improvement in profitability also.
Okay, all right. And you're clocking close to 160 to 190 crores on a quarterly basis in the FMCG business. So clearly that is ramping up. Two-part question. One is for this year, what do you end with regard to revenues on the FMEG business? And for the next year, earlier you all were guiding for around 1100, 1200 crores, which is the break-even point. Both these numbers are on for FMEG?
So since there was like subdued demand in H1, so we are targeting this year a revenue of around 780 crores in FMEG. And still next year will be like in 4 digits. Figure will be in 4 digits, maybe not 1100 or above, but still at least 1000 crore and above it will be. And we will at least we will trying to break even this business in next year by FY 25.
Okay, all right. Thanks a lot for that, sir. Thanks for joining in. That's R.R. Kabel. But